I want to talk to you about Kenneth Goodreau. He, like many of us, is on a roller coaster ride. His fund lost almost $200 million in Monday's sell-off. He made much of it back on Tuesday, then lost a bit more yesterday. Now, some of you have been on that ride with Ken. You just don't know it, because Ken manages Rhode Island's $7 billion public employee pension fund. He is Chief Investment Officer in the Treasurer's Office, and he is with us this morning from Providence. Ken, we talk about the trouble, or at least the tough times that investors are living through when you're in the middle of a market sell-off like this. It's additionally tough, is it not, for pension funds, because regardless of how the market performs, you face obligations. You have to pay out to these public employees. Yeah. How are you handling the situation? How do you position yourself? How do you protect your stakeholders' interests?
Well, I think the important thing, and by the way, good morning, Erik. Good morning, Sara. Thank you for having me. I think the important thing to recognize is it's important to have a plan before events like this are happening. It's very difficult to prepare in the middle of battle, and I would reference, I was interviewed at a Bloomberg Link conference in December, and I pretty much addressed this the same way. So this is not a response to just a bad market. I think you have to have a plan before things get tough.
So how has your plan been playing out? What was your plan, and is it working?
Well, so I think under some criticism, we began raising cash, and right around that time when I was speaking at the Bloomberg conference, I said, we're in the midst of two challenges. One, managing risk, but number two is being in uncharted territory when it comes to zero interest rate policy out of the FOMC. So I think when you have 0% interest rates and a 2.2% yield on treasuries, you really have only two choices because things are so highly correlated. You're either in risk or out of risk. So we began raising cash at the end of last year, and I'm proud to say that we had quite a bit of cash coming into August. I think that's going to help us weather the storm.
Ken, Rhode Island has an unfunded pension liability of over $7 billion. Are you under pressure to make that up?
No, I give a lot of credit to my boss. I think there's two sides of the ledger. Obviously, one, I do have to be concerned about the liability side, but the real job is to stay focused on the issue at hand, which is really risk management and being concerned about getting the best risk-adjusted return that I can in the market. The other side of the ledger, unfortunately, I have no control over, so I'll leave that to smarter people.
Ken, coming out of the financial crisis and the extraordinary market losses we saw in late 2008, 2009, we heard from many pension funds and endowments, again, which all have these ongoing obligations, that the public markets weren't the place to be, that you needed to move into more alternative assets, whether it be private equity with longer term horizons or maybe even hard assets like land and timber. Are you inclined to feel as though that is an even better investment strategy after watching the bottom drop out from underneath stocks these past couple of weeks?
Well, there's a big debate out there, and this is really around whether you take a Keynesian stance or you think that monetary policy is being challenged right now. And I would tell you that that's really the argument. So if you look at what we're doing to the dollar, and that's a direct reflection on commodities and assets that cannot be diluted, and is obviously going to put pressure on financially engineered assets and heavily leveraged. And that's really what we're looking at: is are we going through a deleveraging, and that's going to bolster the areas that we don't want to inflate, but are getting inflated by the medicine that the market's getting right now. So I do think that you have to look at strategy, and you do have to be more flexible, and you have to talk about things that, quite frankly, in the past people didn't want to talk about.
But the key question, Ken, I just want to interrupt you to get down to the key question, which is, after all of this is over, once the market does put in a bottom, are you going to be less inclined to put Rhode Island state pension money back into public markets and perhaps look more for other alternatives?
Well, we've been diversifying away from the public markets for the last 2 years, and I think that that's not because of something we want to do. It'd be much easier to be in a stock and bond portfolio and be buy and hold and walk away. But I think, once again, whether it be hedge funds or alternative assets, I think private equity is a different animal because, it is still a leveraged directional bet. But I think the key here is to really embrace a real return mentality that's not benchmark oriented, where you've got a bogey that you want to hit and a risk-adjusted return you want to hit, and you have to embrace strategy. And that may be things like hedge funds. I mean, we've been building out something like that over the last year.
Ken, great to have you here. We know you have a tough job, and we encourage you for the sake of all of your stakeholders, the public employees of Rhode Island. Ken Goodreau, Chief Investment Officer at the state of Rhode Island.